All right, this is your market recap for October 20th, 2025. As you can see today, we played pretty bullish. There wasn't too much of an expansive, quick move. We kind of just had absolutely zero retraces. We didn't really dilly-dally at all today. So, as you can see here, market opened Sunday here, put in a nice sell side wick here, about 112 points down on the sell side. And then we started to move upwards, expanded above this high, retraced down, constant encroachment of this sell side wick. Even though price closed outside of this hourly fair value gap, the respect here and the reaction off of that still fills me with faith, or filled me with faith, that we would continue to play bullish. And as you can see from there, it's just a one-way ticket straight up. Our target was actually on ES. I do believe ES took out this high. Let's take a look. No, it didn't. Sorry. ES got rid of the SMT we had higher time frame, but no external liquidity was taken apart from this one. Nice relative equal up here. Nice relative equal highs up here are obviously the draw from now on. Now, as you can see here, we ran up and then hit. I don't know if it was a goal or whatnot. There's consolidation here, so it's possible that's what's given us some trouble, but no inefficiencies here as far as I can see. Now, down to the 15-minute. This one's going to be very quickly because there's not a whole lot we can see here. That disappeared. Oops, sorry. Give me it. Thank you. 15 minutes. Perfect. Now on the 15-minute, you can see here 7 o'clock opened, right? Constant encroachment, give or take. It's close enough for me. And then we expanded upwards here. If you remember on the hourly, this here, he said, okay, could it be a retrace, right? It could have been a retrace. 15-minute, no inefficiencies at all. So we just keep working our way higher and higher and higher. Couple minutes pre-market, and I think it was like 9 o'clock, the market rallied one more time, left these relative equal highs, came down, retraced into this 15-minute fair value gap. Would I have liked to have this come lower? Yes. That's what I was basing my trade off of. I was actually highlighting this 15-minute fair value gap there, but we had too much buy side pressure to do that. So we just called constant encroachment on this 15-minute good and just shot straight up in like an hour. And then we stopped at 11. I guess that would be an hour and a half then. Stopped at 11. London closed, so we kind of just either we hit our target, we ran out of volume for the day, or maybe all of them. London just shut down, and it is possibly what was moving us today. Now, 5-minute time frame, not a whole lot more. You can see here, even constant encroachment here, reaction. You could have played these highs as a reversal, but no inefficiencies even on the 5-minute. So obviously, equilibrium was always a possibility. But if it's equilibrium, it's going to reach up here, and we reach up there and have absolutely zero reaction. So even though we got really close to this high, constant encroachment, no inefficiencies, moving up, most likely we're going to continue playing bullish. You can see here, price constant encroachment there. Even at market open, which is usually a little wiry, we then straight expand up. I mean, up and up and up until 1050, the 1050 to 1110 macro. Nice 5-minute here, keeps us up. And then from here, we kind of stay in this range. There are ups and downs, but none of it is trending or anything of that nature. So I didn't really pay attention to any of that. Yeah, not much on the 1-minute either. No sell side SMT here to play with. Again, constant encroachment expanded upwards. At this time here, right in this range, ES was going, I think it was trailing slightly upwards. Let's pull it up. It'll be right about here. Yeah. So if we throw that there, 50%, I don't know why I'm doing this. I have there. Okay. So here we are. Look here, 37. we're trailing downwards. ES is maintaining, maybe even going upwards, right? So we have SMTs of highs here. We're not correlated whatsoever. SMTs of lows as well. So we're uncorrelated. What was I waiting for? I was waiting for some sort of sweep that would get us on the same page again. And in this case, it was a sweep of buy side. Because we had untouched highs here and ES had untouched lows. So whichever one got taken first, that would take us out of whatever uncorrelation we're in. Then I can look for a trade. Unfortunately, I was unsure how we would trade today due to the fact that NQ absolutely destroyed these highs and ES was pretty far behind them in terms of volume. So I didn't know if that would set up a higher time frame reversal. There also wasn't enough sell side reaction for my liking to go long at least. So we took out this high that reset us. SMT here caused us to retrace. SMT of sell side as well during the macro started the bullish move after we got correlated again. And then from there, just straight up. Very little retraces. Again, 5 minute here kept us in. London closed at 11. Consolidation. Slight expansion upwards, but for the most part, still consolidation there. Now, going to the hourly, like I mentioned, relative equal highs up here, definitely the draw. However, I think it is unlikely for us to expand up there without retracing first, given how big is this? 300-point expansion we had today. Now, just because it's unlikely doesn't mean it's not possible. We could expand up here and then play a retrace tomorrow as well. Either way, well, not either way, because if price retraces overnight, I'm playing long tomorrow. But if it either takes these highs and then we retrace, or if we just retrace from here, I'm playing bearish tomorrow. The only way that I will play bullish is if we have a sufficient retrace overnight and in the early portion of AM session tomorrow, and then I'll play long targeting these relative equal highs. So that's just what I'm thinking off my gut instinct right now, but that can always change between now and then. So hold off on making anything concrete. But this has been your market recap for October 20th, 2025.